Hey everyone, this is Robert with goldsilverpros.com. It is Thursday, October 8, 2020. And today we're going to do the second part of the cryptocurrency series talking about state-owned cryptocurrencies and how those are being implemented within the banking system, both at the federal level and at the commercial bank level and the credit union level. So I wanted to go ahead and get started. Let's share the presentation for you guys. And we will get right into it. So the name of the presentation, State-Issued Electronic Money, Cryptos, and the Banking System. Just wanted to remind you that we did 2 articles covering this in general in 2019, and I think both the May and the August newsletters. So here are the links if you guys want to go look at those. The first article is Cryptocurrency, Gold, and Cash, the Battle for Monetary Freedom. And the second is what do NMT, NIRP, and crypto have in common. Please feel free to view those as background information for this presentation and the one that we did just this last Tuesday as well. Table of contents here, what we're going to be going over. We're going to be going over 2 bills that have been submitted both in the early spring of this year regulating the private and state crypto systems. The S3571 Banking for All Act and the HR 6154 Cryptocurrency Act of 2020 have different aims, and we'll go through what those are here in the presentation. We're going to talk about how the U.S. is cracking down on crypto, and that's private crypto like Bitcoin, Ethereum, so on and so forth. Commercial banks create crypto ledger systems, and the commercial banks and the Federal Reserve are now competing for the electronic money space. So it's a foregone conclusion that crypto ledgers are going to become part of our existing bank system. It's just who is going to be controlling it. And the Federal Reserve is really taking the initiative here and potentially putting in a system that will control it across the United States and out of the private banking system. That's very interesting. I'm going to start off with S3571 Banking for All Act. The authority and mandate for member banks to maintain pass-through digital dollar wallets. Obligation of the member banks shall open and maintain pass-through digital dollar wallets for all persons, including persons eligible to receive payments from the United States, pursuant to federal law relating to the coronavirus disease, who elect to deposit funds into pass-through digital dollar wallets. It goes on to state that the authority for state non-member banks and credit unions to offer pass-through digital dollar wallets. The Federal Reserve Bank shall permit state non-member banks and credit unions to open master accounts for the exclusive purpose of offering pass-through digital dollar wallets in compliance with separate entity structure described further up in the document. The pass-through digital wallets comply with the terms, and each state member bank or credit union offering pass-through digital wallets should be entitled to cost reimbursement, subject to such restrictions, limitations, and regulations as may be imposed by the Board of Governors of Federal Reserve System. All Federal Reserve banks shall, not later than January 1, 2021, that would be this upcoming January 1st, make digital wallets available to all residents and citizens of the United States and to businesses domiciled in the United States. All citizens through the Federal Reserve System. If you had any wonder about whether we're all going to be using digital wallets, whether it's transparent to us or not, well, here's the regulation. Now, it hasn't passed through Congress and been signed by the president yet, but they're in Congress. We're trying to get these bills passed. This is coming down the pike. This next legislation, HR 6154, Cryptocurrency Act of 2020, has also been introduced in March of this year. It has not passed through both the Senate and the House and been approved by the president, but it is on the floor. And again, this is symbolic of what's coming down the road. Now, this one is to regulate private cryptos. And who's going to regulate them? I mentioned this on Tuesday's video. Now we're going to get into a bit of detail here. HR 6154, to clarify which federal agencies regulate digital assets and require those agencies to notify the public of any federal licenses, certifications, or registrations required to create or trade in such assets and for other purposes. So this started in the House of Representatives, and it's to clarify which federal agencies regulate digital assets and require those agencies to notify the public of any federal licenses, blah, blah, blah. So in other words, they're going to appoint federal agencies to regulate the private cryptocurrencies. Establishing areas of primary regulatory oversight for digital assets, crypto commodities. The Commodity Futures Trading Commission should be the primary government agency with authority to regulate crypto commodities. What's a crypto commodity? Well, it's going to be some derivative form of the cryptos themselves that would then be traded on the exchanges. So again, not only do we have cryptocurrencies, but we're going to have derivatives that will trade on the commodities exchanges and be regulated by the CFTC, which also regulates gold and silver and all the other commodities. And we've seen how effective they are at regulating manipulation in gold and silver. Now we're going to have that same ineffective, if this bill passes, the same ineffective agency regulating the crypto commodities. For the cryptocurrencies, the Secretary of the Treasury, acting through the Financial Crimes Enforcement Network, or FinCEN, and the Comptroller of Currency shall be the primary government agencies with the authority to regulate cryptocurrencies. The Securities and Exchange Commission shall be the primary government agency with authority to regulate crypto securities and synthetic stablecoins. The Commodities Future Trade Commission shall require any exchange trading crypto commodities to register with the Commission and shall maintain a public list of such exchanges. The Secretary of the Treasury, acting through the Financial Crimes Enforcement Network, FinCEN, shall require any exchange trading cryptocurrencies other than synthetic stablecoins to register with the Secretary, so on and so forth. The Securities and Exchange Commission shall maintain a public list of all registered national security exchanges trading crypto securities or synthetic stablecoins. So here comes the regulation coming down the pike. Again, it has not been approved yet, but these are already being introduced into law because the legislators know that cryptocurrencies are coming to the banking system. And how do we know that? I'm about to show you. One more thing here on HR 6154, and this is really important. Requirements related to cryptocurrencies. Tracing of transactions. The Secretary of the Treasury, acting through the FinCEN, shall issue rules to require each cryptocurrency, including synthetic stablecoins, to allow for the tracing of transactions in the cryptocurrency and persons engaging in such transactions in a manner similar to that required of financial institutions. So in other words, they're going to track everything you do, just like they do through your bank account, through the cryptos. Now, if anybody thought that cryptos were anonymous, I hate to break it to you, but they're not. And I've written articles on this dating back to 2018. There's also an MIT paper that showed that Bitcoin's not anonymous. Why is that the case? Because it's a ledger system that tracks everything, and now it's going to be regulated if this is passed into law, that somebody's actually going to be tracing all your transactions. And being that's a digital ledger system, that's what they do is they trace transactions. How did they relate it back to you? Because the way you get in and out of the cryptocurrency system is through the banking system or through your credit card, and all they have to do is connect the dots. But now with this act, they would actually set up for you, or they would set up the regulation for this formally, and through the banking system, all the crypto ledgers are going to be in place. And now they literally can track your money from the time you get it to the time you dispose of it in every way possible, unless, of course, you have cash, gold, or silver. And here's an article from Forbes talking about how the Treasury Department is cracking down on Bitcoin. So the title is "Blow to Bitcoin: A Significant U.S. Crypto Crackdown Suddenly Revealed." Mnuchin, who last year echoed U.S. President Donald Trump's criticism of Bitcoin and cryptocurrencies, told the Senate Finance Committee and the U.S. Treasury Department Financial Crimes Enforcement Network, FinCEN, whom I've been talking about with that previous legislation, that they're preparing significant new requirements around cryptocurrencies and will be seeing a lot of work coming out very quickly, i.e. the two bills I just showed you. We want to make sure that technology moves forward, but on the other hand, we want to make sure that cryptocurrencies aren't used for the equivalent of old Swiss secret number bank accounts. In other words, they don't want privacy and money, period, end of story. Mnuchin said, adding FinCEN and the Treasury Department more broadly are spending a lot of time on this. Obviously, they're spending time with this, they're going to regulate it. So essentially what they don't want is privacy and currency transactions. They want to regulate and they want to know who is doing what. There's a case here, which I didn't put in this presentation, about someone in Louisiana getting convicted at the state level of money crimes for trading Bitcoin. And and it's on my website. Maybe I'll link this video down below in the description. I basically played the video of this guy being interviewed in front of the courthouse steps just two or 3 days before he was going to go to jail. He got convicted, and it was legislation from the bench because there was no law pertaining to cryptos being regulated as money in the state of Louisiana, nor was there a federal law at the time as being money. Nobody's defined any crypto as being money. And so he got convicted where there was no law, and that's because his idiot lawyer pleaded guilty to something before they even looked at the laws and realized there wasn't a law. Then they tried to go back and change his plea, and the judge said, no, he can't do that because that effectively would, in layman's terms, he basically said, no, because I wouldn't be able to convict you. And I've got all that documented in the article on my website. I'll link it down below. You can watch a video of this guy being interviewed and then my critique after. And then also after my critique, I go through the actual Louisiana state code and go through the federal code regarding money and how Bitcoin and other cryptocurrencies are not seen as money. But there's already been some court cases being developed for precedence purposes to convict people who trade in these and treat them as basically money launderers or fraud in the monetary system. So if you don't believe that they're going to regulate and be successful regulating Bitcoin, Ethereum, and all the other altcoins, You're sadly mistaken because there have already been convictions, and I've showed there are two bills going into place where they're going to regulate the private ones and they're going to promote the federal one, as I stated on Tuesday's video. Next part of the presentation, I wanted to go over who's using versions of cryptocurrencies. Now, it's not just the blockchain. Bitcoin, Ethereum, and all of those altcoins are mostly based upon the blockchain, which is what I call Crypto 1.0. Crypto 2.0 is called Hashgraph. You can look up Hashgraph. It's done by a company called Swirlds. It's a private company. They used Hashgraph for ledgers for a lot of different applications before they came out with a crypto coin. Their crypto coin is basically going to be regulated by a council of global companies. So it's like commercial global company money, regulated money, that's now being used in the credit unions. And here's an article at CoinDesk, which says, unveiled Tuesday, the deal will see the two firms collaborate on a public network based upon Hashgraph, a kind of distributed ledger technology created by the company Swirlds. CU Ledger had previously said it would work with a private version of Hashgraph as a way to connect the group of credit unions backing the blockchain effort. And it's not a blockchain, so that's a misprint. It is a digital ledger technology, which is not a blockchain. Indeed, the latest development signifies that CU Ledger, which has been a focal point for work around the tech within the U.S. credit union industry, is looking to expand the kinds of services it seeks to offer. The Hedera Hashgraph, which Hedera Hashgraph is basically their coin, will be paired with a new global identity solution, MyCUID, in an effort to build what CU Ledger calls a comprehensive system for identity and global payments. Notice how they're putting identity and payments together. They want to track who you are and what you spend. That's already in the credit union system. Underlying the account, and you didn't know because when you go to credit union, nothing changes with deposits and transactions. It's all underneath the system, and that's already going into place. JP Morgan creates a digital coin for payments. How does it work? The diagram below is a simple representation of how the process works. In step one, a JP Morgan client commits deposits to a designated account, receives an equivalent number of JPM coins. The JPM coins are used for transactions over a blockchain network with other JP Morgan clients, payments, and securities transactions. Finally, step three, holders of JPM coins redeem them for USD. Now, JP Morgan is making them redeemable in USD or backed by USD or convertible to USD, but they're not official. They're not official money, and they started using this in their commercial space and their commercial transactional space. And they said that they plan to expand it throughout the banking system. So again, digital ledgers used within, and I think it's called Quorum or something like that, but used within the banking system. Here's another big bank which has signaled its intention to do cryptocurrency. Goldman Sachs, possible collaboration with JP Morgan and Facebook. Of course, Facebook issued its own cryptocurrency. Why not? Everybody's getting into the act. And this article from Bitcoin.com says a global investment bank, Goldman Sachs, has recently appointed a new head of digital assets, Matthew McDermott, a managing director who ran the investment bank's internal funding operations. He has now revealed that Goldman is exploring creating its own cryptocurrency. CNBC reported on Thursday, quoting a new digital asset chief as saying, basically, they're looking to create that. Now I want to talk about some existing systems in the commercial bank. So we've seen that the Fed wants to get involved. We've seen the commercial banks are getting involved, and we'll get to what the Fed system is here in a minute, but I want to talk about the commercial bank system. It's called the Clearinghouse, and this is straight off of their webpage. The Clearinghouse is a banking association and payments company that is owned by the largest commercial banks and dates back to 1853. And this isn't my synopsis. This is actual text I pulled off there, so it's a direct quote. The Clearinghouse Payments Company owns and operates core payment system infrastructure in the United States and is currently working to modernize that infrastructure by launching a new ubiquitous real-time payment system. The payments company is the only private sector ACH and wire operating in the United States. Clearing is settling nearly $2 trillion in US dollar payments each day. Massive system. Well, now that's the commercial bank system. The Federal Reserve is fighting back because they want to develop their own system. It's called FedNow, and the FedNow service is a new instant payment service to the Federal Reserve banks. They're developing to enable financial institutions of every size and in every community across the U.S. to provide safe and efficient payment systems. So this is basically the equivalent of like PayPal or Venmo or something like that, but through the Federal Reserve system, the central banking system. So you can see here, you've got a sender with a bank account that is registered with the Federal Reserve. The payment goes directly to some other's bank account. It's a lot faster than typical ACH, which takes a lot of time, a lot cheaper and faster than a wire as well. It's literally like PayPal or Venmo for anybody that owns a bank account. It's going to make very efficient payment systems, but it also means that the Federal Reserve is now developing their own cryptographic payment system within the central banks. Now, here's an argument from an article from payments.com, which talks about how some of the commercial banks were objecting to this. It says, not everyone favors the Federal Reserve's Board launch of its settlement service designed to eliminate the 3-day check clearing and support instant payments in the US. In response to the Fed's notice seeking comments on FedNow, the central bank's initiative that promises to fuel 24/7 payments, the board received nearly 2,600 responses from a variety of stakeholders. Most of the letters from individuals argue the Federal Reserve should not operate in competition with the private sector and view the decision to implement FedNow as an expansion of it inconsistent with its historical purpose. In other words, the Federal Reserve is enacting something that doesn't appear to be authorized to do, but they're doing it anyway. What is the legalities around this? Who knows, but they're doing it anyway. I mean, what difference does it make? They're the central bank. Are they going to be stopped by this? I have no idea. For the most part, the comments said the introduction of the FedNow would lead to less innovation and unfair competition with the private sector. Of course, because they're a central bank. Who's going to stand up against a central bank, enabling the system built into your bank accounts, in which all the banking systems have all these ledgers and they're going to connect them all together and they're going to implement these systems? Who can compete with that? I mean, it's going to put PayPal and Venmo out of business probably, or at least severely hamper the business and probably affect the credit cards as well, I imagine, for some payments. If say you have a downloadable app on your phone, you access your bank account for whatever bank, Bank of America, Regions Bank, whoever, and JP Morgan, and you go into that app and you instantaneously transfer money 24/7 to somebody else. What happens to PayPal, Venmo? What happens to domestic wire transfer? What happens to all that stuff? I don't know, but it seems like the Fed would just like take over a lot of this ecosystem. The big bank said the Fed's involvement will only serve to slow adoption of real-time payments. The clearinghouse, a payments company, is owned by the nation's largest banks, i.e. the commercial version of this has been operating as a real-time system for 3 years. So what does all of this mean? There's also some additional research, which I haven't shown you guys, which goes on to say that 50 central banks around the world, and this is from the World Economic Forum, a report, said that 50 central banks around the world are doing what the FedNow is doing and looking to implement systems similar to FedNow. So the central banks are going to this instant payment model, and it's all going to be based upon these crypto ledger systems. So they're going to have electronic money. Now, if you put that together with Monday's video where I talked about the IMF as an international agency that does research and helps the central banks implement policy, and how they're developing a system which would discount cash. Basically what that means is you're going to have electronic money around the world where all these systems are going to be connected together. They're going to track you. They're going to know your identity. You're never going to be able to make a payment in these systems without them ever knowing who you are. And they're going to discount your cash to where it forces you to use this system or lose value over time, making it impossible to save and develop wealth outside the banking system. That's essentially what all of this is doing, is putting all of this into place so that what everybody has feared, pure digital money that can be tracked, that can be turned off if somebody wanted to turn it off, if they felt like you broke a law. Maybe we implement some sort of social credit system like China has, where if you speak out against the government, the Federal Reserve turns off your bank account or blocks payments or something to essential services. I mean, who knows what this could be used for if this system is put into place. I mean, they're pitching it as, oh, it's this great system to facilitate convenience, and it's always convenience, and to combat fraud, because everybody that spends cash has to be doing some sort of fraud. But in reality, it's for control of the system, and it's really dangerous when the Federal Reserve is able to put this into place, and 50 other central banks across the world are looking to do this too. It's basically worldwide electronic money. It's the underpinning of the system which allows what I talked about on Tuesday to actually occur, is all the crypto ledgers being put into the banking system. And as I said on Tuesday's video, this is all being put into place. And I showed you today how this is being put into place. Pretty scary stuff. Now, as far as the discounting mechanism for taking negative interest rates on your cash and applying it to electronic money, they've already said they can do this within 3 weeks of the next recession. So that part is already in place. In terms of them implementing full-on electronic money throughout the system, this will take a number of years for them to do it. It may take 10 years, 5 years for them to get all this into place, but they're doing it right now, and they're trying to legalize it with this new legislation. So all of these ducks are being put into a role to implement worldwide electronic currency. The lack of privacy, identifying everything that you do with your money. And really the only thing that you could do to combat at that point was do black market or do bartering, which I'm sure they'll enact some laws to tax bartering or to crack down on bartering somehow, and through gold and silver, which they'll probably at some point say cannot be used to pay for financial transactions. It's a critical asset class, and the central bank should hold most of it. Something along those lines is probably coming down the pike next. But they're definitely getting these pieces put into place to implement worldwide electronic currency. I think in these two videos, I showed you all of that, how that's all going into place. So just to make you guys aware, hopefully this is helpful information to you. Again, I went over solutions on Tuesday's video about how to try to stay out of the system and do as much as you can. And that includes a getting active component where you go talk to your lawmakers locally, state and federal level and let them know this is not what you want. You have to put pressure on the system. They're going to enact the system unless we, the people, as defined in the Constitution, say, this is not what the Constitution says about money. And we think that there are really bad potential effects of this, and we don't want you to do it. You have to have your voice heard. That's really the long-term solution. What I'm doing here is trying to educate you guys and speak about this so we can spread the word and we can start organizing and doing that and letting the lawmakers know this is not necessarily what we're comfortable with. So, we want you to go back to the drawing board, maybe go back to a more honest money system. We don't like all of these things that the central banks and commercial banks are doing to track all of our payments. And further, we don't want any more laws to come down the pike that forces into this system and that could potentially control our lives through controlling our financial assets in this centralized electronic money system. That's basically what we would need to do. And we all have to get together and do it. It can't just be one or a few of us. It has to be a lot of us. So that wraps up this video, guys. This is going to be, I think this is the last part of the cryptocurrency series, at least in terms of state-backed money. I may get into some of the private cryptos, pros and cons of those in the future. Next week, early next week, I'll probably come back and talk about gold and silver, the COMEX, and the futures trade starting on Tuesday to get back into that. But I think it was worthwhile diversion this week to get into the state-backed cryptos because it gives a reason why you want to own gold and silver and why that is defined in the Constitution as money is very important and what you should be aware of in terms of what's coming down in the banking system so that you make sure that you're protecting yourself by not getting caught up in that net that they're basically setting for everybody. Okay, until next time, this is Robert Keynes with goldsilverpros.com.